Good evening, fellow traders, investors, and community members. We are really thrilled to welcome you to this webinar where we will be sharing some exciting news and developments about the Spectre Exchange. Before we continue further, please be so kind and take a minute to read the full risk disclaimer. Okay, so let's kick this off. In our recent update on the Spectre Exchange, we have introduced IEOs, the initial exchange offerings, to the platform where we provide qualified projects the environment for them to bring their coin or token to the market and to the public. With this IEO release, we have one project already in the list whose team is also on this webinar here today, and they will be more than happy to explain more about their project a bit later on. You may access the IEO section from the top left part of the Spectre Exchange platform. The available IEO projects are listed also at the top part of the page. Depending on the nature of the project, there may be different options available for you to select on the left side to interact with the chosen project. Now, prior to the official start of any IEOs on the Spectre Exchange, they would already become listed on the IEO section of the exchange. On the IEO dashboard, you will have the option to join the waiting list for the IEO participation in the chosen project. Also, with the introduction of IEOs on the Spectre Exchange platform, we have also launched the affiliate program for the exchange. It has the already familiar design of the Spectre AI trading platform affiliate portal just to keep things simple and functional. For any affiliation related questions, please do send an email to ir@spectre.ai. And now it is time to pass the torch over to the Chaos team.
Firstly, on behalf of the whole Dart DAO team, I would like to thank UK Auto, the whole Spectre team, and Hatchworks for this beautiful gathering. For you that do not know me, my name is Vasilios Papacharalambous, Bill for friends, in short, and I'm one of the executives of Dart DAO. Although Dart DAO, our organization, may be fairly new, the ongoing operations you are about to hear, like in energy, real estate, digital assets, are over 5, close to 6 years old. Though I don't want to give out any spoilers, because like I've mentioned, I have two of the most important people with me today that I could possibly have. One of them is Dimitris Papadopoulos, our marketing director, and among the best marketers and entrepreneurs that I personally know of. And the second, the most important one that we have today, and I'm sure that some of you in Spectre, the whole community, may be familiar with, although he is not a direct member of Dart DAO, he is an advisor that many organizations would love to have. He's the owner of the Solar Oil project, SOP, that it is absorbed into chaos. I know it sounds a bit strange, but you will hear why the best way to fight chaos is with chaos. Hites, can you hear me? So while we wait for Hites, just to check the microphone or the Bluetooth, I would just also like to give you on behalf of Dart DAO a disclaimer about from where you can participate, some requirements you may see, and you are more than welcome either through the IEO page of Spectre itself or directly if you visit chaos.dart.cas to see anything you'd like about the participation, about the assets that we have. Everything is there already for you, and I encourage you to go over some videos that we have there about the assets, about the team, and many more. Okay, guys, I have Hites with me. It's on my other device, but I believe we can hear him loud and clear.
Okay, excellent. Well, I think everybody on the call is likely familiar with what has now, I think, become the best performing and maybe the most stable project in the crypto space over the last 2 years, which was the solar oil project. It's a project that we have been very happy to have envisioned and been leading for the last 2 years with a very simple concept behind it. The concept was that for any kind of token or any particular offering in the space to have genuine value, especially when it comes to generating yields, it has to be backed by some real world activity. That if all you do is create more and more sophisticated systems with additional layers of tokens that depend on other tokens and collaterals that are further tokenized and so on, then eventually you see yields that seem nice on paper, but they eventually result in a collapse, like we have just witnessed with Luna and we have witnessed with a few other similar algorithmic systems as well. The whole idea was from the beginning to not be reliant on systems like that. And now we have seen that actually play out. And Kay, if you want to talk briefly about your experience with the Solar Oil project over the last couple of years and some of the things you're planning on doing and coming into the team, then I can talk a little bit more about how that has evolved into Chaos and how actually the Chaos project as a whole is absorbing what we have accomplished with Solar Oil.
Yeah, absolutely. So I'm not going to do another sound check. I'm assuming everyone can hear me. Thanks, Hitesh, for the floor. So we have started doing due diligence, very light due diligence on Solar Oil around 1.5 years ago, so September 2020. The discussions started in June of 2020, right in the middle of the pandemic. And since then, we got a bit more involved in understanding what exactly is going on in the US regarding their long-term energy policy strategy and how these abandoned oil wells fit in with that, and then how, of course, the solar oil project fits in with that. The actual investment in it, as you recall, as a community, happened in May or June of last year, and the energy buyback from that, the revenues derived from that, effectively power the SXTT buyback, and those figures are steadily increasing over time, broadly speaking, in line with the projections, the scenarios that we had presented. And obviously, oil going up has helped, and the general production side of things around the world when it comes to supply, and especially now, given the war in Ukraine and other geopolitical uncertainties, especially with inflation, this has made us look more closely at further investments into the space in general. We are actually sending a team of 3 people within the firm to the US to actually do a 1-week site study and due diligence and going through A to Z of not only this operation, but a range of operations involved in the natural gas and energy space. And this is serving multiple purposes, obviously, because the tokens that we list on the exchange, certain particular ones, of course, the quality will vary over time. But as you know, the focus of the Spectre Exchange is for yield-bearing tokens, and specifically when the yield is actually paid in real cash, right? Not paid in more tokens or what have you. So we will be doing these type of detailed due diligences on various projects, not every project, and this one, of course, because we're close to some of the founders, we felt it would be a good thing to do in general. And in general, this is part of the strategy on the investment side of things, to look at more energy related investments around the world. We are looking at a few in the UK on the solar side as well. And that's mainly because of the macroeconomic backdrop, which is unfortunately going to worsen significantly over the next year or two. So with this, we had told you, I think it's almost a year ago, maybe a year and a half ago, we announced that DART would be a thing. This is the first token under the DART project. DART is run by a completely separate team, which Hitesh is, of course, an advisor. It's actually quite a bigger team, and more details of this are in the white paper, which I believe is linked in the IEO section now. It should be, or will be, or it should already be in the next few hours. And the reason we were interested in IEOing Chaos, and mind you, this is an exclusive IEO to Spectre Exchange for all non-US citizens, right? So this is not open to US citizens, of course, but everyone who's not in the US can come here. They can invest in the token. They can do their due diligence. There's a plethora of information to do that. And the reason we are doing this is because we very much believe in the underlying revenue lines that they're involved in. And obviously, I think Hitesh and the team will get into that in a bit more in depth. But when it comes to natural gas exploration and production, and when it comes to hard asset arbitrage, whether it's distressed real estate properties in the energy space or ones that are for development and flip, that's a sector that we know within our firm. I don't personally know that well, but we know within our firm because of our advisors. And it's worth noting that the gas to mining aspect, specifically using flare gas from mining, from natural gas production activities, and rerouting that power into mining, Bitcoin mining, which is environmentally more efficient, is also very thematic. And that's very interesting for us as well to be involved in that, in some specific way. And then, of course, the natural oil production as environmentally clean as possible. And I think there has been some technological developments, Hitesh, that we were discussing recently, where you've managed to make it almost zero power eventually. You can obviously go over those as well. So thematically, it's a very interesting token because of how it generates these revenues, right? And for us, I mean, I'll shut up now. But the only thing I wanted to say about this is it's also very important because in theory, it's a chaos hedge, because all these revenue lines tend to do better when the macroeconomic outlook worsens, right? And I think that's pretty much my piece in terms of why we're IOing this, why we have interest in this project, and yeah.
Excellent. So you actually hit the nail on the head. The thesis behind the chaos token is for it to serve as a hedge in chaos situations. So you have wars, you have rumors of wars, you have massive inflation going on, you have political discontent. There's a lot of issues out there right now. And one of the factors in that is also the access to capital for some of these technologies that are actually quite formidable. They're very significant in terms of their profit generating capabilities, like the kind of technologies we are working with in the energy sector with oil and gas and so on. And again, I'm not going to spend too much time on that because many of the listeners on this call are familiar with an example of that through solar oil with our pneumatic pumping technology and how we're able to use that to produce oil at a much lower cost in an environmentally friendly manner and from abandoned oil and gas projects. So that's an example of that. But fundamentally, the idea behind chaos is that if you are going to present some kind of a mechanism that produces a yield, that mechanism should be rooted in real world assets and real world production. And that's the source of your revenue, and that's the source of the asset backing behind the scenes. And that's what's very interesting, because when you look at philosophically Bitcoin compared to practically every other cryptocurrency, Bitcoin is a difficult cryptocurrency to produce. It costs a lot of money to do so. I think we can all have plenty of discussions about whether that's good or bad. But fundamentally, that difficulty, the consumption of real electricity and real resources, is one of the reasons that Bitcoin has certain minimum value defined to it. Again, plenty of philosophical ideas on whether that's good or bad, but if you're going to generate a yield and you want to get a source of yield, it has to be based on something real. And in particular, since we are trying to create a yield that will not just survive, but do very well during chaotic situations, it makes the most sense to have it be focused on sources which primarily are made up of food, housing, and energy, because those are the three sectors that fundamentally perform well during times of chaos, during times of inflation, and so on. And that's really the genesis of the name chaos as well. So, Bill, if you want to move on to the next slide.
Yep.
Okay. So, over the last, actually over 5 years now, there are all these different sectors that the DART team has been kind of working with in an unofficial manner. And we've kind of put that all together now to produce what is the chaos token. And there are a few key goals that need to be established with this. The first was to make sure that there are significantly higher token holder protections compared to other scenarios like what we have just witnessed with Terra Luna, like we have discussed, like we've seen with some of the so-called stable coins. This is one of the key things that we wanted to make sure would actually provide a certain level of protection for the token holder, in that it could not be just inflationary. It could not just, it wasn't a yield that was being generated from nowhere. You had to understand where it was coming from. So that's the first thing that this has accomplished, by making sure that the yield source is the actual production of oil, gas, agricultural land, real estate, and so on, which we'll get into here in a second. The second is the defined source of cash flows, which a lot of the protocols out there and staking capabilities out there, they all talk about very high APYs. They readily talk about 10%, 20, 30, 40, 50% APYs. But when you ask them to give you a breakdown of where they're going to generate that, the answer is usually something very vague, like, oh, we lend it, and it's lending that will generate it, or we have a protocol that will generate it. And anybody who is a real investor or a productive human being realizes it's not that simple. There has to be real world productivity behind that should be the source of that cash flow, which again is very well defined in this case. And then finally, you have to make sure that this source of yield will not go away in times of inflation, that it is not entirely dependent on what powers the S&P, right? You have to have a very big difference here, in the sense it has to be uncorrelated to the traditional stock markets, so that you actually have this mechanism continuing to work for you, specifically in times when traditional markets are failing. And like we have discussed, that has already proven to be the case. If you look at the trajectory of what has happened with the price of oil versus what you are seeing right now with many stocks, or what you're seeing with many of the popular cryptocurrencies, you see that difference, because in the real world, a lot of the tech companies and a lot of the so-called high valuations, they don't hold muster, but you need to live. So you need energy. So you see energy prices continue to go up. You see the value of the underlying commodities like oil and gas continue to go up. And that's exactly what this project is designed to do. Now, one other important thing I want to point out very quickly is, and Kay touched upon this, that this is not a token that is generating its rewards or generating the yield in some other token or just more of itself. It is actually generating real cash on cash returns. So you're actually receiving your yield in USDC, which it's up to you. You can actually decide to say, I would actually like to also convert a portion of that into more chaos. Since I want to compound my holdings, you can absolutely do that. But there is a fundamental generation of yield here, which is actually calculated in the USDC base. And USDC is the base being used here, because that's the only fully audited stablecoin that we are aware of at the moment in the market. Go ahead to the next slide, please, Bill.
Yep.
Okay, so let's talk very briefly about exactly how the cash flow mechanism works, because it's nice to say, oh, it's oil and gas, right? But let's actually break down what that truly means. You guys might be familiar with other offerings out there and other tokens out there that bill themselves as, we are backed by XYZ, we are backed by oil, or we are backed by gold reserves, or something of that nature. The problem is that just because you have a piece of land, that you have a report that shows there is oil underneath this land, or there is gold underneath this land, you can't just tokenize it, because there is no value to it, right? Like, you have to ask this question: what does it mean that I hold a token that is backed by gold? Does it really mean anything at all? How do I actually access that gold? How do I actually access anything from it? So we have to go a step further and define that as that the yield and therefore the value of the token is defined by the production and the revenue from those particular assets, not just the assets themselves. Okay, this is not a promise from somebody saying you now have governance rights over a coal mine. That's not what this means. This means that specifically the revenue that is generated from the sale of production of these commodities, that is what is being distributed to the token holders. And that's exactly why if the price of oil, gas, and so on goes up, or the production of these commodities goes up, you can expect that your rewards go up alongside it. And it can happen essentially automatically, and you can track that really well on your side. Again, for those of you who are familiar with the Solar Oil project, on our side, it's a very, very simple peg. It simply says, whatever the price of WTI price of oil is, our peg is 60% of that. So if the price of oil is $100, then our token's value is going to be $60 at the time. That's simply an accounting mechanism. In this case, there's a little bit more sophistication because Chaos is not based just on oil. It is oil and gas and a few other assets and a few other revenue sources of those assets that are put together. So you see essentially a range that you are going to earn that is decided, that is declared every single quarter. And that range at the moment is expected to be somewhere between 16% to 27%. Now, it could be higher than that. It could be lower than that. It effectively just depends on how these underlying commodities are performing and what is going on in the world at large. Anytime you see high inflation, you're going to see this APY, generally speaking, tends to adjust automatically at a higher level as well. The point being that if there is inflation in the market, if there are wars going on, if there is, generally speaking, inefficiency and chaos in the market, then chaos gets stronger as a token because the yield gets stronger automatically. Okay, so now let's talk about what I believe is the key that makes this entire process works and why this is so difficult to replicate. Right? This is not a case of somebody else comes along and says, well, I created my own fork. Let me go ahead and copy the code or the smart contract from Chaos, and now I'll have my own token that does this. Well, that's not what matters here. What matters behind the scenes is the network of assets and the network of project managers that actually generate the revenue from these specific asset types. So I'm going to touch upon these briefly for the moment. We'll go into a little bit more detail as needed, and we can go into more detail during the Q&A session at the end as well. But first, let's talk about the natural gas production. Natural gas is poised to be one of the most important commodities over the next 15 to 20 years. As we're transitioning further away from traditional fossil fuels, this has become one of the cleanest sources amongst the fossil fuels of energy. And one of the things that the Chaos token or the DART community, the DAO itself, was able to establish was ownership as well as access to multiple different sources of natural gas, including a 180-mile pipeline in Central Texas, including access to fields from governments around the world, in the state of Oklahoma, in the United States, in Ecuadorian fields. I think Petro Ecuador is offering access to their oriental fields. So there's a lot going on there in terms of access to natural gas. And again, it's not purely about just access to those fields. It's the fact that we can harness that natural gas, which then gets sold out into the market at large. And that's how there's revenue being generated. And that revenue is what is being distributed to the Chaos token holders. Then we have the oil production concept. This is where I have been, this is primarily why I'm so involved in this, is the fact that everything we have accomplished with solar oil is being brought to the front here. So this includes access to oil production in the traditional mechanisms. It also includes access to oil production in a more green technology section, which you can see is the next point, through rehab and recycling of abandoned oil well fields, which is what we specialize in at the moment, what the team that I lead. There are mining operations that are actually that are organically coming up because of the access to the natural gas. Wherever you have good access to natural gas, you find that you can very easily deploy on-site generators. You can connect that to mining units, and you can start generating Bitcoin or other mineable currencies on-site as well. Again, because you are literally creating your own electricity at the lowest cost possible, in many cases less than half the cost of anybody else in your similar region. This makes it a very, very attractive mechanism to add digital assets into the mix. So we are able to mine Bitcoin, as an example, in some cases for costs under $7,000 or $8,000, while Bitcoin is obviously valued between 25 to 30,000 right now. Might go up, might go down, but as that happens, again, it can be adjusted. If it so happens, for example, that the price of Bitcoin goes down so low that is no longer a valid component of this overall strategy, you can simply switch off the Bitcoin mining component and just rely on the natural gas, because again, you also are participating in the natural gas itself. So there are hedges kind of built into the mechanism itself, and again makes it very, very powerful, very secure, and very desirable for anybody that is looking for a secure yield. Finally, you have government agreements, like we mentioned, state of Oklahoma, the country of Ecuador, state of Texas, state of Louisiana. There are a lot of different projects being worked on a state level, on a governmental level, which also then contribute significant capital into this itself. Again, some of that might come from subsidy sources. For example, providing green energy or oil well cleanup services to some of the state governments can generate a source of revenue into the system itself. And then finally, you have liquidation real estate, which is likely to be the biggest component of this strategy over time. The reason why that's likely to be the biggest strategy is because this is very, very heavily focused in emerging markets. Emerging markets like Southeast Asia, Northern Africa, some of the areas in South America. This strategy basically focuses on identifying undervalued assets, for example, agricultural fields or processing centers, food processing centers, refineries, so on and so forth, commercial real estate effectively, which is currently undercapitalized, currently has below market value markings, can be acquired and then effectively arbitraged through the right buyers at a much higher value. So this becomes a very significant source of the yield inside the network over time. And like I mentioned, it can keep growing quite aggressively because it fits into the category, all the categories that we've just discussed. Abandoned oil fields technically fall into this category as well. So there's a lot of capability to grow this. Again, many of you might be familiar with major funds out there that have done very well. Companies like Bain Capital, for example, where they've specialized really in acquisition of distressed assets and then kind of renovating or flipping them for a higher value. That's effectively what this represents. Next slide, please, Bill.
Yep.
So, like you can see in the name itself, DART stands for the Decentralized Autonomous Resource Tracker. The idea here is that the underlying components should be actually trackable. And they should be trackable in an autonomous manner. And this should not be something that a protocol or a person can change at a whim. So in this case, the yield depends on prices of global commodities that are very well established. So there is no way for the DART community or the DART ownership or the DART founders to affect in any way, or chaos to change the rules about whenever they want to. None of that can be done. This is all done in a true global manner that honestly is the first time that we have seen a genuine P2P distribution of commodity production going directly to the users. Now, from a regulatory perspective, this is also very interesting because in the US, it is only available to accredited investors. And what the DART team has done such a good job of is working with companies like Solar Oil, companies that do have the right licenses, that have the operational licenses, that have the operational backgrounds and experiences, that are registered with the right entities or the right governments, for example, with the SEC agency in the US. DART has essentially entered into partnership with many of those firms, which is how all of these different components are being managed. This is not a case of, and I'm going to make this very clear, this is not the case of Demetrius or Bill saying, oh, we're going to go and run these oil fields and so on. they understand that we need to contract with and work with the actual licensed and regulated agencies in each of these different specific sections, in specifically the oil and gas side, or specifically in the real estate side, and so on. And that's what DART has done such a good job of. So DART actually functions almost like an autonomous third party that only has one role, which is to track the production in each of these sectors and pay that out through their chaos token. And again, that is obviously done with a smart contract, so it's not them physically having to do that. Okay, so let's talk very briefly about how the chaos tokenomics work and why this is such a unique situation for everybody on this call to be on. Thanks to Kay and the Spectre team. Effectively, you guys are receiving exposure to this because they have already been involved in this, what has become chaos now, for the last year and a half. They've been doing their due diligence. They have been investors in the opportunity itself. And right now you're hearing about this before the phase 1 of chaos goes live. So there are 3 planned phases of the chaos token release. The first is the 50 million tokens at 20 cents. The second one is 100 million tokens at 40 cents. And then you have the 200 million tokens at 90 cents. The reason why you have these very clearly defined price points of the tokens is because of what the underlying yield will be in each of those cases. So that's such an important thing to point out about this token itself. We're not talking about the value of the token being derived from how many members are in the community, how many people do they have on Telegram, or which exchanges are they listed on. The value of the token is being defined by the actual yield being generated. And that yield being generated by assigning a simple multiple to it, that's how you can come up with the right value for the token itself. The goal is that while the token is being released in each phase, for its defensible value to be at or exceed the next phase value. So there's always a discount for investors now. So as an example, if you're an investor who purchases this token in phase 1 and you are getting it at 20 cents, the expected yield should put it at a valuation of 40 cents or higher. So that when we open the next phase, there is clearly a value defined that makes sure that new buyers who are coming in, the new token purchases coming in, see 40 cents as a very good deal. Instead of thinking, oh, why am I paying 40 cents for this? I should only pay 20 cents. They'll realize that 40 cents is a good price because the yield that has been established in phase 1 is high enough to justify it. And we'll see this as with an example here on the next page in a second. Now, once the 3 phases are done, the expected target price for this token is $1.50 or higher, very simply based upon the value of the yield that is being generated. So you can see right here some very simple examples. On the left, you have a table that basically shows some of the popular yield mechanisms or DeFi tokens out there, and you can see what kind of multipliers they are seeing, what kind of value they are seeing in the market as a whole. It's frankly, most of the protocols out there do not have a defined source. They tend to be kind of incestuous. Once you start looking into it, some cases there are very serious concerns about whether they are valid or not. On the chaos side, chaos is going to be applying a very simple 20x multiple pricing model. So if you look at the right side, you'll see that you have a launch price of 20 cents. The expected yield target is 0.045 cents, which should give it a market price of right around the 90-cent range. You look in phase 2, you have the yield of 0.075, which gives it a market price of around $1.50. And then finally, you have the launch price of 90 cents in phase 3 with a yield of 0.135, which should give it a market price of around $2.60. The important thing to understand is, because this is based in real world activities, because it is not based on just, we'll mint some new tokens and, everybody will magically have a great return. Because it's based in the real world, it is not possible to raise all the capital in one shot and then produce a yield at the same time. It has to be done in this staggered manner, where you start out with a smaller amount of capital, it gets deployed, and it establishes kind of a baseline return. Then you basically open for the next phase and you bring in higher capital for the next phase. and you work with that capital, and so on and so forth. So you basically work in these phases because it has to be deployed in the real world, and because it has to be able to expand upon itself and actually produce that yield. You can't just issue the yield out of nowhere, and that's why you have this staggered approach, which also, incidentally works in favor of the earliest adopters the most, because the earliest adopters obviously then have the not just the ability to see the high returns on the yield side, but also see the most appreciation in the token itself. Okay, excellent. Well, you were editing it on the fly. Okay, very good. So hopefully that makes sense. So there's a real world reason why it has to be phased like that. Incidentally, doing it the right way, which is accommodating for the real world deployment schedule, also makes it so that it produces the highest appreciation possible and gives them greatest advantage to the earliest adopters, which again, everybody on this call is part of that group. You guys are literally amongst the very first people to hear about this, because we're exclusively launching the Chaos token on SPX to kind of kick off a new generation of cryptocurrency projects. We believe that the correction that just occurred, it's purely a coincidence that it happened at this point, but we have long said this is all going to run out, and people are going to realize quickly that you cannot just produce returns out of nowhere. If you just keep printing money out of nowhere, it just creates inflation, and at the end of the day, it all collapses, and that's what we are seeing at the moment. So what we're going to start seeing is a greater emphasis on real projects where the revenue sources are something real, where it is auditable, where it is trackable, and it has some real meaning in the world. And that's exactly what we're starting to see right now. So it's kind of a bittersweet situation. You hate to see people losing all of their capital in these projects, but it is also a required wake-up call for people to demand something real, something that they can actually see, feel, touch, and say, okay, what is the impact of what you're doing? And now you finally have that. Okay, next slide, please.
And I think, if I may add a quick line there, regarding the new generation of products in crypto, Chaos obviously leading the charge there in terms of the quality, the yield. One thing I have to also state is that you've all heard about these so-called fair launches, right? Where secretly certain VCs have received 90% bonuses, or 80% discounts, or what have you, and undoxed teams, and actually no one knows what the hell is going on, and then it all falls. It all comes apart like a deck of cards, and we saw this with Luna in the last 2 or 3 days, right? I mean, we've been told so often that Spectre has missed out on certain innovation in the DeFi space, and then we're reminded by events like this that actually there has been no real progress in crypto. It really has. One can even argue there was more progress happening before incidents like Luna, and so what I'm trying to say is that although SPX is a liquidity provider and a book builder and is doing the IEOs for these sort of next gen projects like Chaos, we haven't received any special treatment at all. So to be clear, the prices we are getting when we invest is literally the price the token holders get or anyone gets. Right, Hitesh?
Yep, absolutely correct. And it's so important to point out this, because you cannot issue some specific discounts because the capital has to go to a real use. Again, this is a very good sign of whether or not a project is real. When you can purchase tokens, if you're a whale, and we have been in this situation, I know the Spectre team has been in this situation, I know I've personally been in the situation where you can approach a project and simply say, look, we will put in X amount of capital, and they're willing to give you a 50% discount compared to what they're selling the token for out to everybody else. We've seen situations where they're willing to offer 70 to 90% discount. That cannot happen with a real world project like Chaos or real projects anywhere, because that capital has a real use. If Chaos token was being sold at a 50% discount, it simply couldn't generate the yield that it requires. And therefore, the token's value will collapse because of that. So again, the moment you involve real world production into the mix, all of that kind of nonsense just goes away by itself, because it simply doesn't work if you don't have the right economics in place. So yeah, in this case, there is no special discount. This is the discount. Phase one, the fact that you are the earliest investors hearing about this, this is the price, and this is the discount that we are all internally receiving. In fact, I will be acquiring Chaos tokens for personal benefit, right? Because I want to expand my portfolio beyond just the oil and gas side that I control. I would like to go ahead and expand my portfolio as well, and I will actually pay the exact same price as well. So this is a very good sign of the behind the scenes reality of a project. The fact that there is no such deal available. Obviously, there are some small situations where if you're working with an exchange, yeah, you might be able to get a very small bounty or a discount or something like that, but it's not going to be anything significant where it could fundamentally change the economics of the project as a whole. And it's actually been very good to see that that's the kind of stuff that SPX is focused on. Again, having worked with the Spectre team for a while, I like that as a principle. And it's very good that that's the kind of project that SPX is focused on. Instead of every meme coin that comes out, let's just throw it on there to try and get some users on. So moving on, let's very briefly discuss how the reward mechanism of Chaos actually functions. So the concept behind it is very, very straightforward. You hold a certain number of Chaos tokens, and I really want to point this out. You're not staking them, okay? So let's take that out of the vocabulary for a moment. You're not staking the Chaos coins. You are holding your Chaos coins. They're entirely liquid. They're in your control. You hold them at any of the participating exchanges. SPX is obviously a participating exchange for this, exclusive one at the moment. So you basically hold your Chaos tokens in your wallet. That's all you need to do. And then as the production occurs and as the revenue sources generate rewards, those rewards are reflected in a daily report in the participating exchange. That's simply a report showing you what is occurring that is not immediately claimable. It becomes claimable every single month. So every month, there is effectively a payout or a disbursement of the rewards in USDC or in additional Chaos. Okay, that's your choice. You decide how much of a reward you want in more Chaos coins and how much of it do you want in USDC itself. Concept being very similar to if you are a participant on Solar Oil, it's a similar concept to that, except in this case, it's entirely liquid, while Solar Oil has a 10-year lockup. That's the way we designed that project because we simply did not have the ability to do what Chaos is able to do as a whole. Now, this mechanism of the way these rewards are paid out is actually a very good way also to maintain good liquidity in the market as we move on from phase 1, 2, 3, and then into the public domain where it's purely just traded on the secondary markets. That's where this becomes very powerful because it allows buybacks to occur. It allows liquidity to be distributed out there. And once you're out of the total number of Chaos tokens that have already been minted, once there are no more rewards that can be issued, it creates tremendous upward pressure on the price. And therefore, your holdings start becoming more and more valuable over time. Similar to how dividend-paying shares tend to be. If you look at shares of companies like Apple that pay a strong dividend, those tend to be more valuable than other kind of shares, other kind of stocks and companies. And that's exactly what you will start seeing here as well. So that immediately, hopefully for many of you, kind of triggered something in your mind, which is the ability to compound your Chaos holdings. So now might be a good time to go to the next slide. So this basically creates a double compounding effect of Chaos itself. So since you have the ability to decide if you want USDC or you want additional Chaos, you can constantly expand your Chaos holdings, which in turn increases how much more Chaos you can accumulate. And again, since you guys are hearing about this as the very first adopters, you have the ability to kind of expand your Chaos holdings over a long time. Remember that the yield of the Chaos tokens is climbing over time because we are bringing in more and more capital and we're expanding all of the revenue sources. Again, that's there's a lot more that goes on into that. There's no guarantee that will perpetually keep rising in yield, but functionally, you should see that over time. Now, as you see that occur, as you see that yield grow up, that means that the previous Chaos tokens that you purchased or acquired through your rewards become more and more valuable over time as well. So there's effectively a double compound effect happening. not only are you earning new chaos, but the new chaos you're earning is actually more valuable than the one that you had before. So it's constantly pushing up your dollar cost average, if you will, of the value of your portfolio as a whole. It's a very interesting concept. It's exactly what we saw just now in the collapse of Terra Luna, where you saw this massive inflationary effect because it's compounded. It's the exact opposite that's happening here, not nearly to that scale, but you're actually now harnessing that same compound effect instead of it going against you and harming you. So the long-term support in the market is very, very straightforward. There's only a 750 million total supply. Out of that, 200 million is dedicated to the liquidity of the company. It is assigned to the different operators that are working with this. 50 million is assigned to the DART team itself, and 50 million is basically allocated for additional rewards, bounty programs, stuff of that kind. If you're bringing in, for example, a new operator to bring in some of their assets, then basically that 50 million can be used to reward them to bring them into the fold. The remainder is basically all released into the market as a whole. Once that 750 million is reached, it's effectively done. So after phase 3, there is no emission from DART. Everything beyond that is purely secondary market. If it comes to a point where there needs to be minting of additional chaos, it will simply be done as a new phase. It will be done with a different token that will just interact with the existing chaos token. There is no way, if you look at the smart contract, the audited smart contract effectively makes it so that it's impossible for new tokens to be minted. Only burning is something that can be done. So if there are more hard assets that come in beyond what can be supported at the moment, there might be additional minting only in that scenario. So you're basically assured that you won't see the devaluing by simply producing more chaos with the same number of assets in the mix. If there are going to be more chaos minted, it will only occur if there are additional assets that come in that will have their own backing, their own revenue, and their own token distribution from it. Finally, really important to point out that the chaos token is not available to purchase for any US members on SPX at all. If you are US based, you have to be an accredited investor, and you can purchase in that case directly from DART, but you cannot purchase on SPX even if you are an accredited investor from the US. It is not available to any state or any nation that is on a restricted or blacklist because of any relationship to terrorism or their inability to have a good vetting system. So if they do not fit in with the prevailing KYC AML regulations, then participants from those countries cannot be token holders here, which I don't think should be an issue. I don't think there's anybody on this call that would fall in that category. And then finally, if you are a resident of St. Kitts and Nevis or other Caribbean countries that fall under that jurisdiction, then you cannot participate in this either. Again, I don't believe there's anybody on this call that fits in that category. Next slide, please. Okay, so now let's quickly talk about what I am actually quite excited about, which is the size, the scope, and the structure of the DART team and other team members that are involved in this. So first of all, you have the team members here. They've already introduced themselves. Basilius, also known as Bill, he has been on this call already. You have Demetrius, who has discussed a little bit about his marketing background and why he's so confident about this as a project. You can look at the names and qualifications of many of the other operational and support members that are involved in the project as a whole. But it's actually the next set of team members that's the more critical ones from my perspective. If you want to move to that one, please. These are the team leaders, okay, or the specific, what are called the special advisors for individual projects. And these are the people that, you know, when you really look at this from the perspective of how do all of these individual entities work? How does the oil and gas space work? How does the natural gas pipeline get looked at properly? This is what makes that all happen. So you'll notice there are some very, very qualified individuals, very competent individuals, and very experienced people on this list. For example, you can see we have Doug Gaines on there. if you're part of the Solar Oil project, you might be familiar with that name. He is from the Louisiana. He's an ex-director of the Louisiana Board of Oil and Gas Commission. Or has been in the oil and gas industry for 30 plus years. These are the kind of people that we can go to and say, here are some assets, here are some additional oil fields we'd like to bring in. Can you go do a valuation on this? Can you tell us how much revenue will we reasonably expect in the next 3 months? And how long will that revenue last? Will it last for the next 5 years, next 15 years, or just the next 3 years? These are the kind of people that can help you run that and make those decisions. This type of human capital is absolutely paramount in real projects. In most other kind of projects out there that you'll see today, it becomes a question of who is a better coder? Can we find a nice designer? Can they make nice pictures of NFTs, stuff like that? This is where there are only a few people in this world that fit the kind of criteria that you need to be able to run these type of operations. So it's very good to see these kind of people involved in here. Amzi Hibler, as an example, ex-CFO of Chevron, he's the one who is effectively managing the pipeline operations for natural gas. It gives you a lot of comfort and credibility knowing those are the kind of people that are involved in your project as a whole. When we look at the commercial real estate and liquidation markets down in Southeast Asia, you have people like Mr. R.S. Yadav, who has been one of the ex-VPs of Reliance and on the Delhi Stock Exchange. There are a lot of very, very interesting individuals in here. When we talk about access to government assets, for example, assets of tribal nations, Osage tribe in Oklahoma, you have Dr. Gavin Clarkson, who is literally the federal ambassador and representative who essentially establishes a lot of these kind of deals between the U.S. government as the federal government and the governments of these local tribes, which is where you get access to some of these very oil-rich or gas-rich fields and so on, where you can work with them. So it's just interesting for me to point out some of these kind of people that are involved. You all can read through them in a little bit more detail. But these special advisors who help manage the individual projects and the individual revenue centers, if you will, within the Chaos project is what makes it so unique. It's one of the ways that this works so well. It's one of the ways that we have been able to make solar oil work as well as we have been able to make it work. So I believe this gives you guys a general, decent overview of what is being done, what the Chaos project is, why this is so unique and so different from practically anything else out there. And the good thing is that this is not experimental. You have seen a version of this play out over the last 2 years, where we launched the Solar Oil project with some pretty significant limitations. It's a staking contract. You're tied in for 10 years. It really isn't suitable for the average cryptocurrency participant out there. And yet, that project has outperformed almost every single crypto DeFi project out there in that time period, simply because it has been rooted in reality. It was rooted in real production that did not collapse when all of these other meme coins and whatever you want to call them, when all of them collapsed. I'm trying to be careful to not say words that would indicate illegal activity on their part, because I have no evidence of such a thing. But these kind of things do not happen when you have real world projects behind the scenes backing all of it up. Now, if you go to the Chaos website, if you go on there, you'll not only be able to see some of the stuff in more detail, you also have actually access to the actual assets on there. Maybe Bill, that's something you want to show on here,
Sure.
but you can literally go there and see the asset locations. In my opinion, in a fairly educated opinion, as somebody who has been involved in this for quite a bit of time now, I believe this is the kind of projects that the crypto world desperately needs. These are the kind of projects that I believe will lead the next big tokenization influence going forward, because all of these nonsensical products where everybody's getting 100% ROI from nothing, from thin air, people have now realized that doesn't work. It's not going to happen, and it might look good on paper, but it never lasts. these are the kind of projects that are going to move this industry forward. And very importantly, this is why you will see a new crop of exchanges and serious companies like SPX also come in and establish a new foothold, because you have had exchanges out there that have pretty much been like, doesn't matter what the project is, as long as they've raised some money and as long as they have some quote unquote community, let's bring them on, and who cares? Let's make money. And then you instead now have serious teams like the SPX team that is saying, let's vet these projects. Let's make sure this is something real and something that we can be proud of being a part of, that we can talk about and be honored to be a part of it, instead of having to, be shamefaced that we have silly projects on here that really don't make any sense. So that's all I have to say about it. Bill, if you just want to show very briefly the assets on here, all of you are welcome to go and check this out. Bill, you can share the URL. And then I think, Kay, if you want to discuss something from your perspective, and then we can open for some questions.
Absolutely, and we have also a direct link, I believe, in the IO page of Spectre. But since I am on my screen here, you can simply either go in the footer, if you scroll down, where it says Resources, Assets Network, or if you can go in the middle of the page, where you can see the statistics. Below, there is a gold button saying View Chaos Assets. Here it is. There is a short explainer video showing some footages, the drone footages we have live from the field, showing you all the assets and the locations. And if you spend a couple minutes, you could see all the statistics, the location, project description, the type, the operator, the yield mechanism, and the asset yield value as well.
Excellent. Thank you very much, Bill. So, Kay, if you want to hand over to Zio, maybe discuss the SXUT component, and anything else you want to cover on the SPX side, and we'll stay on to answer any questions.
Yeah, absolutely. I'm sure there will be quite a few. So stick around for that. Let me just make this is the presenter. One moment, please.
Okay, while we are waiting for this to resolve the technical issues, I do have perhaps an idea what you might have wanted to mention regarding the SXUT token that will actually benefit all the traders on the Spectre Exchange platform as well. So the only thing you really would need to do is have some SXUT tokens on your Spectre Exchange account balance, and the Spectre Exchange will automatically recognize the balance that you have, and you will be getting a discount on the trading fees that we have on the platform. And there are multiple different tiers of these trading fees. The more SXUT tokens you have, the more of a discount you will get on the trading fees on the trading platform. And that's about it. Just have the SXUT tokens on the balance, and everything is done for you automatically. And whenever you are making a purchase or transaction on the Spectre trading platform, you will be presented the fee, and you will then see the discount that has been applied to your trading transaction as well. That's it from my side.
And these discounts, they go all the way up to 90% on maker and taker, correct?
The maker and taker fees, of course, are different, but yes, up to 90% fee discount is something that is on the horizon. Yes.
Cool. And to give you guys some window into future IEO candidates, we have already lined up our second initial exchange offering for it's a pretty large project. It is in the ad tech space, that's advertising technology space. And the reason I'm bringing this up now is not to spread FOMO, although they are a very big project already on the private side of things. They're a relatively known company. But the thing is that we are going to be making select IEO opportunities available for SXUT holders only when the time is right, just to be clear, right? And this is in line with our long-term map. And although it has taken half a decade and may take another half a decade, but we have every intention to dramatically increase the SXUT utility over time. And for chaos, of course, we waived that and we said everyone can participate because it's the initial IO. But for future IOs, the SXUT will also be requiring ownership in order to access certain deals. And I think if I can get us, for now, I think we'll avoid showing the screen where you see the individual discounts. There's already too much information on that already. But what I did want to ask Hitesh, if you're still around, is about the special technology of this new pump that you're trialing on the natural gas side. Because I'm quite a technical guy when it comes to specific production technology. I got very intrigued by that. Do you want to talk a bit about that when you get a moment? And then I'd like to segue into the Q&A. I can see a lot of questions here already. So please, for the next 5 minutes, think about what question you want to ask, and we will get either a member of the Spectre Exchange team to answer it or someone from Dart Chaos side.
Sure. Yeah, I'm happy to answer it. So one of the key driving factors behind all of the yield generating mechanisms within Chaos is a very firm focus on technology aspects that have not been fully implemented in the world today due to limited capital access and so on, right? So that's one of the key things here. So with solar oil, our focus was very much on the pneumatic pumping for lifting fluids. That's what we focused on. One of the offshoots of that same technology is the ability to capture natural gas from a natural gas well, immediately route that into a compressor. You just basically pressurize the same natural gas that you are already collecting and use that to create the pressure, the pneumatic pressure in the pump. And I don't want to lose all the audience because I know some of the people's eyes are already rolling over and they're like, oh, here comes the geek talk. So I'm going to try to keep it fairly surface level for the moment. But the idea here is to create a self-contained system that can allow us to now harness and pump and basically capture the natural gas from these wells. And it requires absolutely no external power source whatsoever. You don't need solar panels on site. You don't need an electricity connection on the site. So you can work in fairly remote locations, which don't even have roads going to them. There is no good infrastructure there. And you can still now access those wells and make them productive. Now, when this was just trialed, 2 days ago, it was trialed with Osage Tribe in Oklahoma. For anybody who's curious, you want to look it up. And it's being done in partnership with the University of Tulsa. And what we found is that we have just trialed the first truly zero emission natural gas capture at an oil well. So what that means exactly is that usually when you are working with these wells, you have some amount of methane that leaks, you have some amount of different residues that leak from it. And that always happens in pretty much every technology. And we were able to show absolutely zero emission offtake from a completely self-powered, self-contained individual system that had no other external connections. This is a trial and error thing. We are in the R&D stages, but if we are able to expand that usage and if we are able to demonstrate that it does work at that level, and we can basically expand the project into other gas well locations, then just like solar oil, this becomes a completely new revenue source of its own, and again now can bring in a whole new generation of assets into the mix for Chaos. Right? This is the way that these projects expand, is when you identify some pieces of technology that allow you to do things that you could not do before, and you can do them much better. Now, what is the real result of that is that not only are you able to access and harness some assets that you weren't able to before, but you're doing it at a much cheaper price than before. And in some cases, you might be able to actually get subsidized because of the net effect, the ecological effect of it. And now you're suddenly, in some cases, 200 to 300% more profitable than your nearest traditional technology competitor. So, and that's, again, what we have found is we have many scenarios where we have a traditional oil well. They are producing oil, as an example, at $32 to $35 per barrel is their cost. We replace their technology, we put the pneumatic system on, now we suddenly drop their cost down to $21 to $25. That's a massive difference in the profit margin. But not only is it a massive difference in the profit margin, it does another thing as well. It now makes it so that this business, this particular oil field, is going to be viable in a much lower price of oil environment as well. So this is not going to go bankrupt. It's not going to suddenly stop working when that happens. And because these kind of pumps tend to be autonomous and they are self-regulated and they keep working and they don't need much maintenance, even in low price environments, there is no reason to turn them off, because it's not like there's a lot of work involved on part of the operator to keep them going, which is what happens with traditional technology, right? If the price of oil is low, price of natural gas is low, similar to like if the price of Bitcoin is low, you're not going to put a lot of work into making your Bitcoin miner work, right? Because there's just not enough profit margin to justify it. But if the price of Bitcoin is very high or your cost of production is very low, then you're going to put in the effort to keep it going, because again, the effort is worth the reward that you get. So hopefully that gives a general idea of what we're doing there. But again, this is what our focus is, right? So Chaos really focuses on very high efficiencies, which can make sense, which can bring us out of chaotic environments. And I mean, that's kind of the idea, right? Even if you look at the general economy as a whole, when you have very high chaotic scenarios, you have very rapid development of efficiency-based technologies, because they're basically necessary at that point, and that's how you progress. So that's my piece on kind of what we're doing, things that I'm aware of. I'm sure there's a lot of other stuff going on in the pipeline space, for example, that I am just not even aware of. But it'll be good probably to bring on some of these other experts onto the call who can share their opinion on what they are seeing and what they are doing.
Yeah, sure. Thank you for that. So let's start with the questions. The first one is from Jaap Spruenberg. He's asked quite a few questions here. I'll try and get them all through to you. So first, he's saying, how is the DAO governed? Do you want to answer that, Hitesh? You can say yes or no if it's irrelevant. Feel free to, or whatever it is. Then I'll move on to the next one. He's asked around 7 questions in this one.
Sure. The DAO is governed very simply. You have the founders. Most of the functionality of DART is going to be run through the smart contracts. The reason why it's set up as a DAO is because the DART team, right, the core DART team that you saw in the slides when we were going through them, with Bill and Dimitris and so on, these guys don't really have any direct influence on what the returns are and how they're being generated. That they are simply the tracker who's tracking the production across all these different activities, and their job is to distribute that via the smart contracts to the token holders. So that's how the DAO is set up at the moment. The governance, this is not a governance token. So just because you own Chaos, you're not going to be governing anything in the mix. You're effectively just receiving a portion of the yield being generated.
Thank you. And I think you answered his next question, which was, is this a governance token? He's saying, how is this related more to traditional company structures that would need to be involved to make commercial transaction in the real world? And what is the relation between the DAO and DART DAO Systems Private Limited? Any color you can give on that?
Yeah, DART DAO Systems Private Limited, I believe, is the company set up in Nevis, which is the issuer of this token. So you have to have some legal entity that is actually issuing the tokens, right? Because you need to know, who do I hold liable? Who do I hold responsible for proper distribution? What if I pay for the tokens and I don't receive them in the pre-launch phases? Then that's the entity, that's the company that is releasing that. That company is owned, by the way, with Bill, Dimitris, and so on. So it is identical to the DART DAO. So DART DAO ownership or founders there are the same as the ownership and directors on that DART DAO Systems LLC.
Okay, thanks. A question from Dan Pierce. SXDT has arguably not been able to match other tokens' growth in the sector, and due to its peg/reflection of real-world actual earnings. Is DART fundamentally different? So I'd answer from our side, our bit, and then maybe Hitesh, you can answer from Chaos's side. That's absolutely correct, Dan. We have, for better or for worse, not seen any capital growth in the token and SXDT in the last 4 to 5 years, mainly because the businesses, indeed, the yield, if you will, has been similar or static, although rewards have quadrupled since the beginning, or tripled or quadrupled, but they've largely kind of flatlined in these markets. And so, from a price to earnings multiple basis, SXTT is just valued differently, right? And the rewards have to reach a different structural level; they have to go up in order for the price to follow. And the price will follow, mainly because there comes a certain amount of yield which becomes unsustainable. A certain amount of yield draws in more capital, which drives the price up, right? So right now the yield on SXDT is maybe 4% net, 5-6% gross, roughly, something like that. If the price stays static, right, but our revenues see a spike in growth, or they reach a fundamentally new level once this market fog clears, then of course you can't have the price still where it is and the yield suddenly is at 12% or 15%, right? The price would need to rise to adjust to that. So that's what I can say from our side. Now, when we collect capital here, right, we don't put it into the ground immediately and that starts producing. The products and the revenue lines here are addressing different markets. Some markets like gaming are very large. Financial trading is also significant. And of course, there are different competitive pressures, et cetera. But we don't take capital. We never took capital and just put it into the ground or put it into certain investable opportunities, sort of in the 3-month, 5-month, or 9-month timeframes, right? It's a different type of business. So that's what I can say from our side. Hitesh, maybe you can speak about, is DART fundamentally different to SXDT?
There are a few small differences that I think become quite critical over time. First of all, like Kay, you just mentioned, there is a very big difference in marketability of a coin that is posting very significant returns. Now, again, that only works as long as those returns are being generated. But while that is happening with Chaos in the beginning, there will be pretty significant market attraction to it. So that there's a value to that. Second is where we are in the market as a whole. Where we are at the moment is there's a very strong desire and thirst for projects like this. And the fact that the assets are there and all these things are already running, I think it makes a pretty big difference. The real answer to this is that Chaos as a token would appreciate in value only after phase 3 if we do succeed in getting a lot of good marketing out there and we also get on some exchanges. That is a necessary component of getting the token price to appreciate. So I want to be very clear that that is a part of the roadmap of the DART team and of Chaos in general to make sure that that happens, to get the users, to get the attraction, to get the secondary markets going. I think the SPX is also very interested in that. And pretty much, I mean, that's kind of the end goal for SPX as well. To that end, there are some very, very well-known, famous celebrities that are being brought on to create that kind of attraction, to create that kind of marketing hype and so on. They're actually coming on a partner basis. So this is not just like a paid promo. We're not just paying some celebrity to go and make a tweet about it. I cannot divulge the names yet, but these are very, very famous. We're talking about A-list Hollywood celebrities that are coming on basically as partners to the project. So you will see that component as well. So there is that side to it, which SXDT rightfully did not pursue because at the time, security token, there were a lot of different concerns about it. But that was something that SXDT could not have pursued in its environment at the time, but we will be able to in the current environment.
Okay, I see a follow-up from Yap. Will holders get both USDC as rewards and extra Chaos tokens?
Yes, you have a choice to. You get to determine what your breakdown is. And Yap, I think, has been a Solar Oil member as well. So just like in Solar Oil, you're able to determine what percentage you want in additional SOX and how much you want to just withdraw in the oil production. Similarly, you'll be able to define that here. How much do you want in USDC and how much do you want in chaos? It's your choice.
Right. I think to be clear, when he says extra chaos tokens, it's not extra printed out of thin air. You get an X amount in USDC and you can determine how much of that you want in DART, correct?
Correct. You can't just produce chaos. Again, that's the whole beauty here, that chaos cannot just come out of nothing. Chaos is going to be produced in response to some activity.
Yeah, no, definitely.
And
I think the reason.
you're not going to spend it.
Yeah, I think the reason that he's asking that it generally reflects kind of what's happening in DeFi world is, your kind of cash yield is maybe 1 or 2% or something like that. And then your token, they give you a lot of tokens, right? 20, 30, 40% a year. And those tokens are eventually worthless. So yeah, but I'm glad you made the differentiation. So his follow-up question is, if yes, what is the use case of distributing new tokens, new chaos tokens to chaos token holders? Hitesh, go ahead.
What is the use case for it?
I guess you answered his question. Basically, he's asking what is a use case of these new chaos tokens and what are these new tokens backed by?
Okay, so let me clarify. When we say new chaos tokens, they're not a different type of chaos token. It is functionally the same chaos token in the sense, if you have 100 chaos tokens to start with, and let's say there's 1,000 chaos tokens in distribution out there, then you are effectively receiving 1/10 of the total rewards being generated, right? Which is 1/10 of the total revenue from the commodity that is flowing into the chaos system. If you instead expand your token holdings to 200, now you're receiving 20% of the yield that is being put out there. So it's a very simple concept. There is nothing. I think what is happening here is you might be looking for a layer of made-up sophistication or complexity, because that's how a lot of these DeFi companies work. Well, we wrapped the ETH into the SETH and then we moved it into Bitcoin, made it a WETH and
exactly.
whatever. Like, none of that is happening here. It's a very simple concept. You are simply acquiring more chaos tokens. So whatever the yield is that is being posted by chaos, you are receiving more of that over time. Yeah. So if you are constantly compounding and increasing your chaos holdings, then you're also increasing proportionally how much of the yield you are to receive over time. Yeah. The chaos is not coming out of thin air. You are receiving it in lieu of the USDC you would have gotten. So instead of getting $100 in cash, you are saying, give me $50 cash and give me another $50 worth of chaos tokens.
And that $50 in cash is reinvested into the various revenue generating lines, which is not received, right? Which is taken as chaos. So that's effectively reinvested.
Right. So in one instance, there was going to be $100 going out, but instead of $100 going out, $50 went out and $50 worth of chaos went out. The net effect is exactly the same as somebody coming in and buying $50 worth of chaos. So yes, that capital now goes into expanding further the production on these assets.
Again from Yap, he's asking, how is Solar Oil absorbed into chaos and what will happen to the current SOPX contracts? Or is it separate?
Yes, so they are separate things, but we will simply not be launching any more portfolios on Solar Oil. Once this is fully live, we are basically going to shut off new contracts or new purchases on Solar Oil. So they'll occur through chaos, and we are going to give the option to convert your SOX. So whatever the total number of SOX that you hold right now, which is your oil contracts, right? We're going to give you the option to convert that into equivalent value in chaos tokens. So for you, basically the process becomes easier. It now gives you the ability to be fully liquid. So instead of being locked in for another 8 years, you can effectively say, 3 months from now, if you want to sell a portion of your chaos tokens, as long as we are public at that point, you'll be able to. So once chaos is a publicly traded token, you are able to liquidly exit from that whenever you would like, which is not a possibility on SOP, the way that it's made. So it is just a net benefit to you. Nothing else changes from that.
Okay, good question from Johan von Blaumann. He's asking, how are you going to update the chaos investors going forward?
On Dart. So Dart is the issuer. Dart.cash is the website, and if you have an account there, you will basically receive updates through there. If you don't have an account there, then who are the participating exchanges, which will be SPX in this case, you will receive the updates through that side. But we will be holding, I mean, obviously, there's going to be the chaos community of its own, right? There's going to be a Telegram channel, and you guys can post Keck the Clown memes in there instead of just the Spectre chat then. But we'll basically have Telegram chats, we'll have stuff like that. Again, this is very, very early days. You are all hearing about this because SPX is launching this as its first exclusive IEO. So you're hearing about it now, but before we go live, you will essentially be able to join a community of its own. You will have investor relations team there. You'll have all sorts of stuff that you would expect from typically a large scale investment system.
Yeah. Jeff has a question. It's similar to Yabs. He's saying, will chaos supersede the solar oil tokens, SOX, SOPX? In my understanding, they're separate, but they can be converted into, right?
Correct. They're separate, but we will offer a one-way conversion. So people who have currently active SOX contracts, they'll be able to convert that into chaos. However, there is a whole other mechanism there, right? There's also a regulatory thing that goes into that because we have some US members on SOP as well that we will need to address. So it is a little bit more complex than that, but that is fundamentally, that's the process. They'll be able to convert their SOX holdings into chaos and continue to yield the same level or higher in some cases. They'll be able to get that kind of yield moving forward from chaos instead.
Yeah. Okay, I see a question from Paul. A good question. Thanks for that question. So Paul is asking, why not base the IEO access on long-term holders and supporters of SXDT? It's a bit of a kick in the teeth. Since ICO, I have been in SXDT, and now I get limited access. I mean, all the long-term holders. Yeah, Paul, I see that point. I mean, I think one thing we need to take into account is that it was always the case that SXDT would have the privilege of financial gains, cash gains, as and when the firm does well. And SXUT would benefit from utility. Now, with Spectre Exchange, in the event that the IEO strategy works and we see increase in volumes, billable volumes, this is a lucrative project for us as well. That of course translates to more rewards for SXDT token holders, right? Now, I want to be very clear. There are going to be perhaps this year 3-4 special projects brought to Spectre Exchange, of which maybe one will be restricted to SXUT token holders, and we would make that a fair amount, right? Not a restrictive amount where you need to hold, thousands and thousands of dollars worth of SXUT. But most of the IEO projects that we do make available, and they're quality projects as well. Let's be very clear, like Chaos, we would do so without the restriction that you have to hold SXUT. I'm saying there are some that we would like to attach to that. And, ultimately, I'm not going to apologize for this. SXUT hasn't been forgotten. It never will be forgotten. And I have been called stubborn before. And yeah, I'm stubborn. So we're going to make sure that it works. And SXTT kind of does pay for the burgers and the milkshakes and sometimes a nice meal at a good restaurant at the moment, but these are very tough market conditions. We obviously have a long-term view to make transformational gains for our token holders, and that remains unwavered, but we are in very, very difficult market circumstances. And this has been the case. This has been the case for a while, except last year. Our journey has been pockmarked by very difficult market conditions from time and again. So and SXUT, as a result, of course, has suffered. And now is the time to bring that back a little bit into action. So I hope that kind of gives you a bit of context behind why we have chosen this. And I'm glad you asked it, because just to be clear, this is just the beginning. because with skill gaming, although this webinar is not about skill gaming at all, we have now offered SXUT as a way to get a 30% discount on white labels, right? So a lot of our partners are very interested in that, and when that happens, we will be putting that on the SPX webpage as well, where you'll be able to see which partner paid how much for how many SXUTs, which they have to hold in order to activate the discounts. Yap has a question to Hitesh about solar oil production and how that's kind of ticked down while oil prices have gone up. Could you tell us a bit more about the source of that ticking down? Is it the wells depleting at a higher rate? Are the tokens being issued faster? Is the onboarding of new oil wells or other reasons? Any color you can give on that, Hitesh?
Sure. So that's a very natural thing, and you should expect that with chaos as well. Although you won't see that with chaos, right? So that's one of the big differences with solar oil. You see like exactly what the oil production itself is. With chaos, you'll only be seeing the actual resulting revenue. So if you were looking at this from a chaos perspective, you would have only seen that the net returns have been climbing because the price of oil has been going up faster than the production has been dropping. Now, the reason why the production drops, it's actually very simple. I'm going to walk you through as an example. So when you first acquire a field, you don't buy a field and it's just a bunch of holes in the ground and that's it, there's nothing there. Usually you acquire a field and there are already, let's say there are 300 wells on it and 100 of them generally just have trash equipment, they're not working at all. And then you have other 200 where you have 100 traditional pump jacks that are in good condition and 100 of them that are not really in a very good condition. So you don't know when they're going to stop working. Now, when you take over this field, what you start doing is that you take the wells that are completely inactive right now, right? You take those 100 and you start putting pneumatic pumping on there. Okay, that's what we do. That's our functional goal. And so we have a certain amount of production that we are deriving right now from this field, and we start putting our pneumatic pumps in, which will increase our production. But as we are doing so, there are also pump jacks that are going down. Okay, because genuinely, some of the pump jacks that are going to be in a bad situation, they're going to hit their capacity in about 2 months, 3 months, some of them 6 months, but they're constantly going down. And so what we do is once a pump goes down, we take the old equipment off and then we put our pneumatic pump on there. Now, when that happens, you don't really see a net gain in production. Because all you did is you had one pump that went down and you replaced it with a new pump instead. So you either kept the production same or a slight increase, but not a very significant increase at all. Now, while you have a supply chain issue, you're not able to replace the pumps that are going down fast enough with the new pumps that you're putting in. And if you are replacing the old pumps that are going down, then you're not actually activating the wells that are completely dead. So the estimate that you had in the beginning that these 300 wells could produce 200 barrels of oil per day, you're not able to get to that fast enough. And that's how you see that reduction kind of occurring. So the reduction is a function of two things. How quickly is the old equipment going dead? Second, how slow are you in getting the new equipment in, which is a combined function of how much capital does it cost, what is the supply chain issue, and so on. Notice that from the time we started the solar oil project to now, some of the equipment cost has gone up 30 to 50%. So the other thing was that at one point, we were able to deploy 10 wells with, let's say, $1 million, right? I'm just giving an example. Now the same $1 million might only allow us to equip 7 wells. And we still might be losing 10 pumps during that time, right? 10 wells are going down. So that's simply what's happening. Now, over time, you catch up. There comes a point where you're over the hump. All the pumps that were going to go bad have gone bad. Now you've already replaced them. From that point on, you will only see a net increase in production. And the only reduction you see there is about a 1 to 2% reduction on an annual basis, just because the well sites do see a very small reduction every year moving forward because it's a passive decline curve. But that's functionally what you're seeing. That's the biggest primary reason. The second reason is that you can't go out and acquire cheap wells like we were able to during the pandemic stage. When the price of oil was around $40 per barrel, we could go and acquire a ton of wells very quickly and cheaply. Right now, that's not really possible. Right now, everybody is like, well, I'm not going to sell you my well because the price of oil is at 100. earlier we could get some of these wells for $5,000 to $25,000 range. Now they're asking for $60,000 for the same well. So that slows down how quickly we can acquire new productive wells. So it's a combination of those factors, but you will find that our increase in return or our increase in the price of oil has massively outpaced our reduction in the increase in production. So overall, the returns are actually ahead of where we projected it in the beginning, even though the production is lower. So it all balances out. Now, if the price of oil drops and the supply chain issues kind of go away, then even though the price of oil comes down, we will still see our production going up faster in that case, and we might be able to make up for that. But again, guys, real world stuff, I can't press a magic button and just mint out a bunch of new wells and then sell you their NFTs. So this has to be really done in the real world. And these are the kind of bottlenecks that you face. And that's the other reason why Chaos did not simply say, let's just take solar oil. And frankly, we wouldn't have done that deal anyway. But if Chaos was just saying, let's just, rebrand solar oil and work with that, we wouldn't have done that because the same bottleneck would exist. The reason why Chaos is so much more attractive is because they have diversified, they have multiple different sources, so the bottlenecks in one particular sector don't necessarily affect the other.
I move on to Bart. Bart is asking, where will the yield be paid out on SPX or a DART platform like Solar Oil? So I'll answer from the SPX side, and then Hitesh, you can answer on the other bit. Bart, SPX for non-US citizens is the exclusive global platform where you can claim rewards on Chaos tokens, just to be clear, right? So you have to have an account there. And then Hitesh, you want to answer the other bit?
Yes. So it is on a platform. Okay, it can be the DART platform or it can be the SPX platform, and over time there will be additional platforms as well. This does not require a lockup or a staking like Solar Oil did, right? So you don't need to lock up your tokens in a location. But yeah, the rewards will be paid out in partnership with the participating exchange. So right now the two participating exchanges are DART itself on DART.cash and then SPX. So you can go to any of those two, and as long as you have your tokens, you'll receive your rewards there. Like I said, over time, we will add more in there.
Okay. What increases the yield of the different phases of the IEO increase? It's a question from Johan von Blaumann. Hitesh, you want to answer that?
Yeah, the yield goes. Yeah, sure. So the yield goes up simply because as more capital gets deployed, a lot more of these assets become active. So at this point, we have access to all these assets, but they're not all actively producing revenue, right? And that's why simply having an asset-backed token doesn't mean anything, because it could be an asset that produces no revenue and there's no point to it. So right now you have all these assets. A small portion of them are active and producing revenue. That's the whole point why we are doing the capital raise through Chaos token sales, right? Because that capital goes in and starts activating more and more of these assets. And that's how the return starts climbing. And that's how the total revenue kind of uplifts over time. And that's why in each phase, you see a slight increase in the return. However, I wanted you to notice something. If you actually do the math on it, just divide the yield by the price of the token that the price of the token that's being sold at, right? So in phase 3, it's 90 cents. You will find that as a percentage, the yield actually drops as we grow over time, okay, as a percentage. But from your perspective, as an early participant, the yield is constantly going up because in each phase, the price of the token itself is going up, which means the amount of capital going into these fields is higher. So from your perspective, it just looks like yield is going up. But as a percentage, the yield is lower in phase 3 for a new token buyer than it is for somebody who invested in phase 1. So I want to just do the math on that and you'll see that pretty quickly. So we expect, for example, that we might do 22 or 23% in phase 1, and we might only do 18 or 19% in phase 2. But from your perspective, it's not going to look like that because you're going to say, I bought this token at 20 cents and now I'm getting a higher yield than I was getting before. But that's because the new batch of sales that we did those at 40 cents, not 20 cents. Does that make sense? It's just a function of how it appears from your perspective. But overall, the yield does drop, or we expect it to drop, right? We might be surprised. Maybe our yield will go up. But we expect that the yield actually will go down at least a little bit as we expand and the total amount of capital deployed goes up, which is exactly what you expect. As AUMs grow, most funds find that it's harder for them to produce really high returns.
Yeah, in terms of capacity, if I may have a follow-up there. So what is the theoretical capacity? Let's say, because obviously there are different revenue streams here, right? There's the hard asset arbitrage, there's the oil production, there's the natural gas production. What's the total capacity in terms of if the project does raise its target raise over the 3 phases, which I think is a figure of something in the range of 200 to 300 million, right? What is the, let me ask this, what is the current capacity already in the ground that you have installed in total across these projects in millions of dollars? Number one, and what is the theoretical capacity?
I can speak very intelligently on the theoretical capacity on at least the oil production side. On the oil and gas production side, our capacity right now with the assets that we are aware of is about $6 billion. Okay, so far above what Chaos is aiming for. The capacity on the real estate side, because that's simply a much, much larger market on the liquidation assets, and the liquidation hard asset arbitrage is what's called the HARP program. The capacity there is probably 5 times of what we are looking at on the energy assets. So the capacity is far, far above what we are currently showing or going for with Chaos. Part of the reason why we are doing that is you only want to take on what you can truly handle. If Chaos does what we believe it can do, if we raise all of our target raise, then I think we will have basically a project. We'll say this is very successful, we've done very well, and now it's time for us to basically bring more assets in and repeat the process with another phase, with a Chaos Part 2 or something like that. Because we cannot modify the maximum supply that we already have here. But yeah, like I said, theoretical capacity is far, far above what we are aiming for with Chaos. We would rather not go for the max capacity, right? We'd rather take a piece of it and do really well with it instead of trying to get the whole amount and not really manage it well.
Got it. Thank you. Good question from Richard Lansik coming up. There are quite a few similarities and connections between DART and solar oil, specifically for the oil field side of things. Will there be interferences between the projects? How do you decide which oil field comes under which project, Hitesh?
How do you decide which field goes to Chaos and which field goes to solar oil?
Yeah, pretty much.
Okay, yeah, because all the new stuff goes to Chaos. We're not putting any more fields into solar oil. Solar oil is only going to maintain what it already has. And once we do the conversion for our users from solar oil onto Chaos, then that will also simplify it further, right? Because we will know exactly how much production we need to leave with solar oil, and everything beyond that will go over to Chaos. It's actually much simpler than it might sound. If you look at how traditionally oil and gas contracts are structured, there is a massive level of complexity in there already. You have somebody who's receiving a royalty, there is somebody who's receiving a certain amount of the working interest, there's a mineral rights owner, there is a landowner, everybody has their own little cut in there. So you produce a barrel of oil, but you really only get to keep like 0.67 or 0.65 barrels of oil. You might get 0.8 in a very good circumstance, because there are all these other people who have their claims to small amounts of your production. So demarcating between solar oil and Chaos is a walk in the park compared to what you already have to do there.
Got it. Okay, a question from Dan Pierce. Is 300 million United States dollars a realistic raise over the 3 phases? That's his question. And I'd like to interject with my own question is, of the first phase at the moment, Hitesh, which is for 50 million Chaos tokens at 20 cents, so 10 million total, what amount have you already committed? What have you seen from commitments on the private side?
So that's why this is a whitelisting webinar, first of all, because we are actually gauging what is the true interest in something like this. I can tell you that we have received enough verbal commitments at the moment to complete our phase one already.
Yeah.
So that's the amount of verbal commitments we have at the moment. Will that translate into phase two and phase three as well? I'm not sure. There is no way to know until we try it, right? But I can tell you, I'm very confident that phase one is basically going to be done without any issues. Phase two, fairly confident we can do that. Phase three, will we actually raise the entire 200 plus million? I don't know for sure. I don't want to say that we will for sure or not. But I do know there have been absolute crap projects out there with no fundamentals, with complete nonsense, that have raised far, far more than that. And I think right now, with the recent shellacking that a lot of these people have received, they've hopefully opened their eyes enough that they say, I would much rather work with a real project that is actually paying out yield that is comparable to a lot of these scams. I mean, if I remember right, wasn't Anchor and Luna was only paying 20%. And we are already doing that with a real project, with auditable reports on where the production is coming from. We're already in that range. So I do think that as we go from phase to phase and the word spreads about what we are doing and the market kind of starts recognizing what is happening here, if we get the kind of embrace that we expect from the market as a whole, that, yeah, this is something real and we need to do this now moving forward, or crypto will forever just be, a bunch of guys playing poker together with fake money. I mean, this is what you need. So, yeah, I can't promise that we're going to raise the entire amount, but we don't need the entire amount. Whatever the amount is that is raised, that's the amount of production, and that's the amount of rewards that our existing holders would receive. So, for you as a token holder, it doesn't really impact whether we raise the entire amount or not.
Yeah.
It impacts you to the extent that are we able to get the returns from real world production? And that's your key question. The real question you should be asking is, how are we assured that the money that we spend on these tokens will actively go to increase revenues from these different sources? And will that work or not? Will the revenue actually come in? How do we know that the yield actually works? I think that's the more important question.
Got it. Okay, I see a follow-up question from S. Williamson, but before that, I see a question from Johan for Blauman. He is asking if you will also be holding quarterly webinars like Spectre does.
Well, our intention is actually to hold more frequent webinars than just quarterly. That's something that the DART team needs to have a discussion about as well. I am very heavily in favor of more communication than less. I think the more you communicate, the better it is for everybody that is involved. So maybe we will even go for more frequent than quarterly webinars. However, I cannot speak for the DART team as a whole. Remember, I'm speaking here a lot more aggressively about this whole project because I'm very familiar with the ins and outs of on-the-ground realities of what it takes to make this happen. But that's a question for Akis and Bill. So Bill, can you answer that?
For sure, we will.
Webinars?
Absolutely. Once we have all the pieces on the ground and we start whitelisting users and getting closer and closer to the phase one launch date, we'll be happy to have even a weekly webinars and bring some more of the advisors of the different aspects on the natural gas, on the oil production, on the green energy, on the mining, and so on, so we can shed even more light and be as transparent as possible.
Got
Absolutely.
it. Thank you. Hitesh, one point I want to hold you on is when a SOPX user, if an SOPX user wishes to swap into Chaos, it's a slightly different investment case because obviously you have a more diversified revenue stream there. But equally, is it fair to say obviously the yields are lower, right? Although they are double digit with the ranges that you have given for Chaos, high double digit. But the yields are of a different profile relative to SOPX. But I guess with SOPX, the contract runs out after 10 years, whereas this is into perpetuity, right?
Correct. So two things. First of all, it's not just that it's into perpetuity. The fact that you actually have an appreciation component here that you do not with solar oil. Because here, your Chaos tokens, you actually could exit and quadruple your return there as well, which you do not have the capacity to do that with solar oil. So I don't think it's actually fair to say that the returns there will always be better.
Right.
The second point is that the returns on solar oil are also higher because we've also seen the price of oil effectively almost triple in the time that we've been running the project.
Yeah.
That may not happen again. I don't think we're going to go to $300 price of oil. So I don't think it's going to triple again. However, I don't want to say for sure that the returns here will be lower because some of these things can outperform the oil production itself. So let's take the real estate case, the HARP project. We have had HARP project where we have generally had a few transactions that we have seen that produced 100% ROI on an annual basis, right, on an annualized basis. So it may or may not. Our current expectation is that its general yield, its baseline yield will come in below the yield that we see on solar oil, but its overall yield, when you account for the appreciation and the ability to exit, might actually trump the yield that we're getting from SOP.
Okay. I have a follow-up from S. Williamson. He is asking, or she is asking, I have one specific question left. The observed 30% decline in production on a yearly basis. What is the forecast for that going forward? I guess in terms of current SOPX holders, for the effects that you mentioned that caused this decline in production, what can they kind of expect in the medium term, let's say over the next year or so? What are you seeing in the market there?
You will notice that actually from the very beginning, we gave a range on the side. If you actually go on the calculator today, I believe the calculator still has the same range we had from the beginning, which is a range from 1.5 to 4. That's the range of how many barrels of oil we expect at the minimum. So right now, I believe we are at 2.1 or 2.07. I think that's the neighborhood where our production level is. The absolute lowest that it can fall to is 1.5. Okay, that's the worst case scenario. When it falls to that level, it cannot go any lower because contractually, the deals that we have with the operators, that's about the minimum that it can go down to. So that's why that number is there. And you can do the math, even if it was at that number, which we don't expect to get there, even if it was at that value, it would still outperform the entire crypto market for the last 2 years. Having said that, our forecast right now is that we will continue to see small declines because the supply chain issues are not getting better. If anything, they've gotten worse. I think we will continue to see some small declines. I don't think we're going to ever get to 1.5. I think we will stabilize in the 1.9 to 2 range at worst. And I don't know if you guys have noticed, but you'll already notice that there was a time period where it was pretty steep on how quickly the production was declining. But if you've noticed in the last 2.5 months or so, the production has really not declined very much since then. It's been a small creep downwards, but it hasn't really gone down much. And that's what we expect. I believe that's where we kind of stay.
Okay. Question from Ciplo. Is the DART platform also from Hatchwork Spectre or is it from Chaos itself? I can confirm it has nothing to do with Hatchwork or Spectre. So the DART platform is completely separate. It's not ours. Okay, S. Williamson has a question about Chaos. What assets will be the first investments in? Hitesh, I think this is on the white paper itself, but yeah, please go ahead.
Yes, so this is covered in the white paper, guys. I would recommend that you go to the site, read the white paper, look at the assets video and so on. The assets that are highlighted in there, currently the breakdown is that the capital gets proportionally distributed across all of them. So we don't say that we're going to take majority of the capital and put it towards this one asset only. So it's going to go it is going to be distributed across all the sectors. Then within those sectors, we have high priority targets. For example, when the capital goes into the oil production space, we have priority right now on our Louisiana and East Texas fields because we already own those. We have a good nexus there. We have a fairly large crew of employees who can work on those fields right now. Once we are done with that, then our next priority is Oklahoma and so on, right? So that's how that works. On the gas side, we have a 187-mile pipeline in Central Texas. That's our first priority. But right after that, we have some locations in Kentucky. And alongside that, we have our contract with Ecuador. If that comes through, then that will certainly become our first priority. So that's always shifting around, but it's by each sector. However, the capital that comes in gets deployed across all the sectors because we don't want to be heavy into just one thing.
Quite a few follow-ups from S. Williamson. If I apply for the waiting list, do I have to put in an amount I want to buy at the start at once or during the whole phase one? It says during phase one. So is it possible to buy over a period of time or just at once? Also, when is the sale starting and how long do you expect a phase to last?
So this is covered in the white paper. We are currently allocating 90 days for each phase and then a break in between. The goal is 90 days or when it gets fulfilled, whichever is sooner, and then we want to move on from that. Again, that's our current plan, right? And that plan could change. It just depends on how things play out. Right now, we think that we will complete our phase one in less than 90 days for sure. Then we will have a short break, and then we'll basically make sure the deployments are all done, and we'll announce the date that phase two will begin at that time.
Okay, S. Williamson asking, and do I have to buy the amount of tokens I apply for at the wait list? No, that's not the case. I mean, we would appreciate if you could keep it realistic and not say that you're going to buy the entire raise out and then come in and buy $200. Just keep it realistic for the purposes of admin. But yeah, it's not. This is not a commitment. Sachin is asking, when is Chaos Phase 1 open for investment? Hitesh?
So we are doing the whitelisting. We have a couple of things to complete after the whitelisting. It is likely going to be towards the end of this month is when we're going to open. But we will announce that date. Obviously, SPX will announce that date as well as soon as we assign that finalized date.
Okay. So I see no further questions. Thank you, everybody, for attending the webinar. And this is, of course, has been recorded and it will be on Spectre Exchange for everyone to view as well. And you will hear shortly about the next steps after you have whitelisted and you've committed if and how much you will be investing in the Chaos token. Then let us conclude this. Thank you, Team Chaos. Thank you, Bill, Hitesh, Dimitris. Thank you, Otto and Zizis. And we will see you shortly.
Thank you. Thank you for me.
Thank you as well.